Welcome, everyone. I'm the founder of Quidroom, the social platform where accredited investors and investment professionals globally find each other. Before we kickstart, for all the investors who are listening in to the session and the podcast, if any of your questions are unanswered or to attend future investor meetups, you can join hundreds of other investors in my personal community. The invitation link is posted in here. So today we have Raphael Roettgen, an active early stage investor in space startups. So Raphael, we'll be chatting about an out of the world topic, pun intended, about how investors can beat the current bear markets by investing in the space sector. But even before we dig deeper into the status quo and try to understand a little bit more about what he can achieve in the future of the space economy by investing into it, it will be great if the listeners can get to know you and especially how you ended up being one of the early investors to realize the potential of investing into the space economy.
Yeah, sure. Thanks, Pravin, and thanks for inviting me. It's a pleasure to be here again. So I'll quite happily give the brief introduction of myself, I suppose. So I'm originally, by training, I'm an investment banker, and then I worked on the buy side, on prop desks and in hedge funds, mostly public markets focused. And then skipping a few years, I was an entrepreneur, a fintech entrepreneur in the meantime as well. I basically, I took a very deep look for a number of reasons at SpaceX about 5-6 years ago. And, when I had already watched SpaceX launch rockets and sort of enjoyed watching the launches on a sort of a more emotional, visceral level, but I'd never analyzed the business in detail. But I did that basically 5-6 years ago, and it became clear to me, that there were some very fundamental changes going on in the space sector, driven substantially by SpaceX and some other players. And the key aspect here is the quite dramatic decrease in cost of accessing and operating in space, and launch cost, thanks to reusable rockets. That's one part of it. But then actually component costs and just the cost of basically taking capabilities to space, they're just dropping very, very dramatically, at times orders of magnitude. And I started forming the thesis that, this type of significant cost decrease is just going to enable a whole new space economy, and which would be a very exciting place to be for decades to come, as creative entrepreneurs will come up with business models that will take advantage of these much lower costs. So that has been my journey into the space sector.
So that's great. That's great to hear, Raphael. Look, you definitely end up investing into the space at a time when there were a lot more critics than there were believers. So definitely you were one of the first players to get in there. But now, since you were one of the investors who actually ended up being in the shareholder list of SpaceX, so I need to actually quiz you around that, but I'm going to quiz around the future of things, right? So currently, of course, SpaceX is something that people see that, okay, there is potential in investing into space because of SpaceX. But outside of SpaceX, and let's say even Blue Origins, are there really any good investments out there?
Oh, I very much think so. Again, the core thesis is here that creative entrepreneurs will take advantage of these favorable macro tailwinds, right? The much lower costs. Well, sorry, that's like an inherent, tailwind. But then there's also like macro tailwinds, right? I mean, the unfortunate things which are going on in the world right now, that actually means that more money is going to flow into government money is flowing into space, right? As military budgets worldwide go up. So there's actually opportunity across a wide range of business models. And, this includes business models which have existed in space for a while. So things like satellite communications in its various forms and the whole value chain there, remote sensing, sometimes called Earth observation, satellite navigation, GNSS as we call it. And then, so those are traditional, I would call them traditional business models, which have been around for a while in space. Although they're shifting now in the way they are being done. And then also more recent business models, which again are substantially enabled by the much lower costs. So this is including things like space tourism. And obviously there is, relatively speaking, many more flights happening already with space tourists, both suborbital and orbital, but also more exotic sounding things like in-space manufacturing And this is basically, I mean, staying with that example, that in space manufacturing, why would you want to do that? It's basically taking advantage of the special conditions we find in space, substantially microgravity, but it could be other things as well, like the hard vacuum or even radiation. And that's a prime example of, you know, something that we knew made sense sort of from a scientific point of view, because we've conducted many experiments in space, but it never made any economic sense because space used to be too expensive. But now it starts making sense, and the cheaper space becomes, the more use cases will start making sense.
You hit a very good point there. So I know for a fact that from the time that I was a child, that a lot of technologies we enjoy today, like the LASIK, the CT scan, freeze-dried foods, all these came into place because of the impact that space had to an extent, right? I mean, exploration in space had to an extent in our own livelihood. But but I'm just trying to see about the things that you mentioned in here. So we spoke about from an investment perspective, right? So in space manufacturing. Now let's just look into that. So, and there's going to be a lot of other opportunities for things that people on the ground on Earth will be able to benefit because of things that are being done in space. But what are the companies that are doing that right now? And if we compare that in a risk scale, do you think that currently the companies that are there that are doing anything around it, are they more on the higher risk scale if you choose to invest into them, if you get the opportunity to invest into them?
Well, it's going to depend on how individual investors define risk, right? Which we could easily do a whole episode, or probably several episodes around. By the way, this is probably where the point in time where I should also give sort of the necessary disclaimer that nothing I discuss here is investment advice nor solicitation. But look, I mean, for the space sector, the majority of companies we look at, well, the majority of companies in the sector, I guess, given of where we are time-wise in the space sector, are early stage startups, right? So in my fund, we focus on the seed stage. Sometimes we even do pre-seed. There are certainly now later stage space companies around, you know, certainly many Series A companies, some Series B, some Series C. I think SpaceX is like Series M or something like that. I don't even know where they're using letters anymore. But a lot of it is very early stage. So yes, of course, you are taking, people have to be aware that as usual with early stage startups, you are taking market risk, probably taking market risk, but it's going to depend on what situation you're looking at, right? Some people are attacking basically existing markets, just offering better, solutions. And then obviously that's mitigating some of that market risk. And then you're also very often, because it is a deep tech sector, you're taking technology risk, right? That's obviously something where, you know, we try to be, this is a cliche, but we try to be smart takers of technology risk. So, you know, if you're investing very early stage, and there's something called technology readiness level that we use in the space industry. So if you're, and this is a scale from basically like 1 to 10, but if you're at a very low readiness level, you know, there's going to be remaining technology risk for sure. You don't know if something works until you take it to orbit, and there might be other things to check out. We try to mitigate it as much as possible and investigate it as much as possible. And that's actually what we consider one of our core roles as specialist investors, right? That we help mitigate that and help analyze that. But you can never, or in many cases you can't, well, I think in every case, you cannot eliminate obviously the technology risk 100%. As a deep tech sector, there's going to be some remaining technology risk, but we try to eliminate as much as possible. And that's where we see one of our key value adds, you know, like we, you know, when we take money from investors, we have to avoid like a Theranos type situation in the space sector, right? That's, I think, what all of us space investors are trying to avoid. So you have markets, you have the typical early stage risks, market risk, technology risk. Of course, there may be risk on a team as well. That's just the reality of very early stage investing.
Absolutely. So if I'm hearing this correctly, Raphael, currently there are only long-term investment opportunities in this sector. There is nothing that we can call short-term unless you are, yeah, I mean, there's nothing short-term.
So if I was to use sort of language from the world of investment management, I mean, I don't think personally, I don't go around and pretend that people should put this in a tactical asset allocation. You know, I always focus on strategic asset allocation. Okay, like what's your appetite? What's your bucket size for alternative investments, and then within that for like, thematic early stage investing. And that's where I think people should have an allocation to space. I mean, obviously I'm talking my book here, but I very much believe that this is an interesting sector because of these macro trends for the next, honestly think decades to come. I think, we may be at a similar moment here as the internet was in the mid 90s, that you have these really big technological trends, but we're only just scratching the surface on exploiting them in an entrepreneurial way. There may be, of course, opportunistic tactical opportunities. So I can't give you a current one right now, at least not any that's not confidential. But look, we're in a certain market environment now, as we all know, and there has been a lot of sort of, not a lot, but there certainly have been excesses, I think, in many parts of the market over the last few years. And it's quite likely that in the space sector as well, we will have some even interesting companies that will encounter difficulties, run short on cash. And so that there may be interesting tactical opportunities in that sense, right? For people to for example, engage in consolidation and picking up good companies, good assets at favorable prices. But that's not, our core focus. We focus more of the long-term trend. We're very excited, notwithstanding what's happening in the short term in the market. We have extremely high conviction. We're very excited that the space thematic is one of the most, interesting themes that's out there, and people should have it in their asset allocation for the long term.
Absolutely, and Raphael, the interesting part is just in the last few weeks, Morgan Stanley and McKinsey, two very big institutional organizations, have come out there with detailed reports supporting exactly a very bullish view about investing and the growth prospects of space investing. So I do, on a positive note, I do see that this space not getting enough investments in the future. There will definitely be a lot more companies, and I do see that the opportunities are growing as well. And it's very interesting, in the last few years as well, there has been 22%, is that right? 22% increase in private market capital going into this sector as compared to government capital. So there has
been almost a continuous increase, and we're seeing it. I don't have the exact number here, but we're certainly also seeing it anecdotally in terms of like new investors coming into space, including very often general. Because there's very few specialist investors like ourselves, right? But we're seeing some more generalist investors trying to, enter the sector and see how they can get exposure to the sector, right? And that's just the private side. And then just to open a quick parenthesis, of course, one other thing that's very interesting about the space sector is, and that's mitigating part of the risks, especially compared to other sectors, is that this continues to be a sector that's considered extremely strategic by probably the majority of governments worldwide. So you always have sort of like some government underpinning as well, including in very volatile markets, because the government, it's not going to change. They're not changing their mind that this is a strategic sector depending on the market environment. They continue to support it.
Absolutely, and that is also in a way something that I want to ask you about, because any sector that has a lot more government intervention, there is already going to be a government wise. There's going to be already that risk of change in regulations that can happen very abruptly because of something that actually just went wrong. Is that something that you consider when you invest into companies? What might be that potential political risk of those investments? Is that something you consider for everything?
Absolutely. I think, again, talking my book here, we probably look at it more from the positive side, the government support. But of course, we're very aware of what the applicable regulations are, and that's spanning a range of things. That's sort of like companies that operate in orbit typically need what we call spectrum rights, right? So they have to go in the US to the FTC, which then goes to the international to the ITU, right, to get these allocations. It's involving things like export restrictions, right? Because a lot of space technology is considered sensitive. But so we are very keenly aware of all of these relevant regulations and take them into account when we make an investment decision.
Absolutely. So from one of the listeners, there's a question specifically around understanding your views on mining in space and what would be the opportunity for investors on the long term around that.
Yeah, I think in the long term, there should definitely be opportunity. There's actually, in fact, there was a company, a US-based company that just, I think it was 2 or 3 weeks ago, they announced a seed funding round. I think it was a low double-digit $1 million amount. From memory, the company is called Astroforge. And they want to go and basically mine asteroids. That's sort of the first company, well, the first funded company I'm aware of what I would call a second generation of space mining companies. There actually was a first generation of space mining companies, two prominent ones that people in the sector will know. One called Planetary Resources, which was co-founded by Peter Diamandis, who's a well-known guy in the space sector and beyond the space sector. And another company called Deep Space Industries, or DSI. And those were sort of like, I think both of them were started in the early 2010s, off the top of my head. Both of them effectively failed. I mean, I think they both technically got sold, emergency sold, but I mean, for all intents and purposes, they failed. They were just too early. I think now that we have made considerable progress on both the technology stack, all of the technology stack that you need, just simple things like propulsion, cost-efficient propulsions and things like that, robotics as well, right? I think the time for space mining will come. It's probably, so we didn't look at Astroforge, or we didn't look in depth, I should say, at Astroforge. We're not looking at anything else in space mining in great detail right now, because, even though our fund lifetime is 10 years, which we consider to be the appropriate lifetime for a space fund, this might still be outside the time frame, is my guess. But, it may come inside the time frame within a few years, I think. You also got to keep in mind, it's interesting in mining, I'm not a terrestrial mining expert or anything, but people that I do know in the mining industry keep telling me that even if you want to develop basically a new terrestrial mine on Earth from scratch, you're talking sort of very often a decade plus time frame. So it kind of starts getting closer to the feasible time frame in space.
So we would let's categorize that as really early stage when it comes to investing, and a little bit more high risk. So we were talking about the horizon of 10 years, right? So now let's look into exactly that horizon of 10 years. Where do you see the opportunities if asteroid mining is not one of the top ones that you would categorize in there? Then which are the ones that you personally feel is?
And don't get me wrong, I think asteroid mining will be an opportunity. It's just, we think there's other opportunities before that, right? So one thing we're getting very excited about right now is sort of what I characterize as a shift from infrastructure to applications. And what do I mean by that? So, we have put in place a lot of space infrastructure recently, and a lot more is coming online in the next few years. And what I mean by space infrastructure is basically stuff like a basic transport capability. So rockets, like SpaceX's rockets that can take you up to space. And then actually, importantly, there should also be a capability to come back from space, which we call down mass, right? We don't have that much, but people like SpaceX can do it. And there's a few other startups working on that. So transport capabilities, infrastructure, and platforms in space. For example, those could be just satellites that can host payloads, but it could also be like space stations, which are several private space stations are proposed right now, and people are working on them, right? And that's partly supported by NASA as well. And so with all of this infrastructure, and that also includes, by the way, satellite constellations, like remote sensing constellations that have, different types of sensors to observe the Earth and communications. So all of this infrastructure now is up there, or a lot more is going up the next few years. So as investors, early stage investors, while we are still looking at these infrastructure type plays, we are increasingly shifting our attention to, well, if all of that infrastructure is there, and by the way, it's also there at increasingly better and better prices, right? The trends we talked about. What kind of applications can we run on top of that infrastructure, right? And the applications could range from anything, if you're talking infrastructure in terms of like, satellites with sensors, optical sensors, infrared sensors, what we call hyperspectral, radar. The application could be, okay, what can we use these sensors for to help some big existing industry on Earth, right? Which is something we get very excited about, because we're only scratching the surface on that. And notice I said big existing industry on Earth, which basically translates into big potential market, right? Because there is potential customers with a lot of money to pay for value-added services. So that could be an example. Another example of an application is what I already mentioned is, you use an in-space platform in orbit to manufacture things in microgravity.
And one more question in here from John. Do space startups need dedicated accelerators VC programs, considering it's a long-term game and investors may not see return for a while? Sometimes it might also go beyond one generation of investors. Do you think there's enough interest at early stage?
So I'm going to be talking in my book, right? I do believe that both startups as well as our co-investors benefit from specialized VCs. Again, this is a very deep tech sector, right? It's and this is not only about the technical due diligence capability. That's obviously a very important part of it, right? It's also about the network. This is a very sort of historically and continues to be a very sort of separate network, basically, of space geeks, right? It's like if you go to a space conference, we pretty much everybody knows everybody else, right? You kind of you in or out. It's a very separate network in a way that, you know, I could look at other verticals in the way that if you go to a biotech conference, it's going to be a certain group of people. And so both space and biotech will be different from going to, like, you know, like a general investment conference, or even like a more, even like a software as a service type conference, right? Which will attract a much broader you know, audience. These are very specialized communities. So beyond just the technical due diligence capability, it's also important to be at the center of that specialist network, right? Because that then helps us to add value to our portfolio companies in many other ways through the network, whether that's finding co-investors, whether that's finding staff, like help them in recruiting, whether that's finding advisors, whether that's finding customers, suppliers, other business partners. We're early stage investors, right? So we tend to do all of those things, right? I mean, we see our role as significantly more comprehensive than just providing capital. We really try to add value in all of those ways. And that's, in order to be able to do that, you really have to be a specialist investor in something like the space sector. So that's from the entrepreneurial side. And then I was talking about other investors. So other investors tend to really like us as well, because, you know, if you're a generalist investor, and again, this is a very deep tech sector, you know, it can be intimidating, right? And again, you don't want to end up with like a Theranos or something. So if a specialist investor like ourselves comes in, it can give you like a lot of comfort, which then again is something why the startups like us as well, because the startups know that if they put like somebody like us in the round, it helps them get non-specialist investors in there. This is actually a very, very common situation. It's the majority of cases where, you know, startups go through a round. They tell us, look, we have these family offices interested, these generalist VC funds, but they really want like a specialist VC in there to kind of give that, you know, lighthouse effect.
Absolutely, and I know that you're part of the inner circle around this. I completely understand that is a very different sector, right? And the reason why I know this is because I listened to your space business podcast. Is in my Spotify playlist, and you have spoken to some pretty incredible people in the industry, right? Even a lot of astronauts as well. So from those conversations and investments that you do as well, I understand exactly why for startups having someone like you in their cap table is going to add a lot more value than a family office who will at the end may end up just being a financial investor. Now, since you are very close to the industry and you are considered to be one of the active investors in that industry right now from the early stages itself, it will be good for you to give let's say 2 tips to the listeners, especially majority of the listeners are going to be high net worth individuals. So how would these high net worth individuals be able to take advantage of the space economy and the investment opportunities that are going to come up in here?
Yeah, certainly. So there's obviously a few different ways by now to allocate to the space sector, and both in the private market and now increasingly also in the public markets. So I mean, it's kind of all obvious things, right? So if you run through them, so in the private market, you can make direct investments, or you can outsource to funds like our fund E2MC, but or some other funds as well. And then there's even like a space crowdfunding platforms now. And then in the public markets, you have obviously now also a number of listed pure play space stocks. A lot of that thanks to what was going on with SPACs over the last 18 months or so. I mean, that's the whole topic by itself, but one effect is that there's a lot more listed space companies now. And because of that, you also have now, off the top of my head, at least 3 sort of, if not space focused, then sort of space weighted ETFs now in the public markets. All of them, the big ones, well, relatively big ones in the US, right? So there are different ways of getting exposure. You know, I'm not looking that much at the public markets. I mean, even though we have many more stocks now, it's still a relatively small number. Pure play stocks is like a few dozen, basically. And the sort of public markets discussion is a whole topic by itself. You could spend yet another talk on. On the private market side, again, I will talk my book. I think this is very deep tech, so direct investments, people should tread with care, right? They should, see who else is in the round, if there's people like us in there, if, who's doing the technical due diligence, things like that. Again, it's a very deep tech sector. I mean, we really do compare it a lot to something like biotech, which also is very separate communities, right? Also on the investing side, right? You tend to have your generalist VC funds, and then you have biotech specialist VC funds. And, we really think that a similar thing will evolve on the space side of things. So yes, you can directly invest, but I would tread carefully. I would make sure, who's in the round. This is somebody who really understand what's going on. Or of course you can, take advantage of the opportunity to invest indirectly via an expert vehicle.
Great, thanks, Raphael. Now we are going to move into a private discussion for accredited investors and investment professionals only on Quidroom. So it's going to be mainly to discuss a little bit about your fund, to get a bit more idea about what your fund currently does and how investors could directly work with you. For those who are watching the live session across social media, if you are an accredited investor or an investment professional and would like to join this discussion and follow with Raphael in his investor community on Quidroom, use the link in the description to set up an account on Quidroom. It only takes 3 minutes. Then you can join the live discussion. Even if you're not able to join it right now, this will also be a way in which you will be able to listen to the recording in Raphael's room if you missed anything. For everyone who's going to be listening to the podcast, I recommend to you, if you are in any ways even minutely interested to have a position in space investing, then if you want to understand exactly what are the opportunities out there, I recommend that you check out Raphael's podcast. Listen to exactly what different experts in the industry are talking about. It might not be completely investment related, but it will give you an idea of exactly how the industry works. And sometimes before you even invest into anything, it's just about understanding exactly what the people in the industry are talking about, just to get an idea of it. So Raphael's podcast is definitely going to be one of the places that you can check that out. In addition to that, if you're an accredited investor, then I would recommend that you join Raphael's community in here. And Raphael, one thing that I would want to actually ask as a last question is, you're slowly building your investor community here in Quidroom. What is the kind of content and that they can expect in the coming weeks and the coming months from your end about that can actually help them with their journey as an investor who's looking into the space?
Yeah, absolutely. I hope to provide a range of content. So when I don't spend my time investing, which is obviously the majority of the time, I try to do a lot of what we call space education and outreach, just because it is such a new sector to many people, and you have to educate people like the generalist investors, right? So there's going to be regular publications where I just write articles on topics, and I'm working on a few. By the way, I've written an introductory book to the space economy as well, which so far had been out in German and Portuguese language, but it'll come out in English imminently. So when that's available, I will post that as well. I will keep people abreast on the podcast, which is typically have a new episode at least every 2 weeks. Sometimes it's weekly. It depends a little bit on our schedule, on the schedule of our guests, who are typically space entrepreneurs or other prominent people from the space sector. And there's actually also now a few online courses that I've put together, either myself or with partners, again, to educate people on what is the space economy, what are the business models, what are the big trends, things like that. There's actually going to be, I can give you a preview here. There will be a investor-focused course out very shortly. So a course that's specifically targeting investors to get them up the learning curve for space investing. So I hope that's going to be out in the next week or so, at least soft launched. And so I will also post about that.
That's going to be exciting. That's going to be really exciting. And yes, let me know. I will definitely want to see exactly what it's all about, because this sector interests me. And interestingly, institutions are taking taking a positive, bullish look towards it. That means it is something that will be receiving more and more private capital, which means this will definitely, I personally feel this will be the best time to actually get into the market, so that you will be one of the early investors. So I personally feel that you're in the right space, doing the right things. Let's make investment better, one step at a time. For today, that's it from my end. We say goodbye.
Thanks, Pravin. It's a pleasure.
Thanks,
Bye.
Raphael.